Hi, this is me, Sachin Kapri. Welcome to my video presentation. My student ID is NPS29993 and my title is Financial Statement Visualizes, and this is the third trimester with unit code SA1020. So according to the assignment, I have chosen NAB, National Australian Bank, as my company for ratio analysis. It is a well-known bank which operates its operation in New Zealand, Shanghai, Chicago, and many other parts of Asia. It offers a wide range of banking activities, which includes banking, internet banking, international banking, investment banking, uh, insurance, credit cards, home loans, and many more. Its five important segments are consumer banking and wealth, business and private banking, corporate and institutional banking, angel banking, corporate function, and other. It is it has a very good record as it has fulfilled fulfilled its corporate responsibility and has ranked as the first 500 companies in the Carbon Disclosure Leadership Index. So I'm going to discuss the two important financial ratio of NAB. The first and foremost is liquidity ratio. It is a very important tool to assess the ability of company. So liquidity ratio means the comparison of current assets and current liabilities, whether the company is able to satisfy its current obligation or not. So it refers to the ability of company to convert assets into cash quickly and cheaply. The main importance of liquidity ratio are: it measures the ability to cover short-term obligation. It is useful to compare the strategy of the company. Based on liquidity ratio, measures can be taken to improve the performance of company. So the current ratio, quick asset ratio, and operating cash flow are required to determine the liquidity of company. The second ratio is profitability ratio. As the heading is enough to clarify, it helps us to know the profit of a company. So higher profitability ratio, higher the financial condition. So based on profitability ratio, investors can decide to invest in company. Comparison of company's performance can with competitors. It helps to uncover areas in which business needs to work. So to determine the profitability of NAB, gross profit margin, net profit margin, return on assets, and return on equity have been calculated and analyzed. Thank you.
Good morning, everyone. First of all, I would like to introduce myself. My name is Bharati Chalise. My student ID is EMB5081. As a part of group assignment video presentations, we have calculated different ratios for NAV bank and is presented on the chart. And they are current ratio, net margin ratio, operating profit margin, return on assets, return on equity. At that then the mm, current ratio, almost all ratio are in favorable position. The current ratio is less than 1, so that means company is not having that much liquidity. In comparison to 2019, the company is still doing its good. Now coming to the ratio 1 by 1. First of all, we take current ratio in a NAV. In NAV in year 2019 was 0.82, while in the year 2020 it was 0.80. So basically the current ratio explain whether the short-term obligation can be paid through or not by using the current assets. Thank you so much. I hope I try to make it clear. Have a good day.
Hi, my name is Jaskaran Singh Sandhu, EMV 5329. Today, I am representing a group presentation for our group number 007. I am discussing two ratios, return on assets ratio and return on equity ratio. First one, return on assets ratio. Return on assets ratio is used to reflect how well a company is using its assets to generate revenue. ROA is considered as favorable when it is more than company's historical performance or industry average. The best use of return on assets ratio comparison of company with similar companies or past performance of the company. The return on assets ratio of NAB was better in 2019 because net income was higher in 2019 as compared to 2020. This ratio indicates efficiency of use of assets. The higher return on assets ratio in 2019 indicates that assets were more efficiently managed in 2019. Moving further to our next ratio, return on equity. It measures rate of return that common stockholders of a company receive on their holdings. ROE indicates good how good a company is in generating returns on investments it received from its shareholders. The return on equity ratio is essentially used by investors to judge how the company will be able to use their investment to generate additional revenue. The return on equity ratio of NAB in 2020 is lower than return on equity ratio of 2019. The ratio is lower in 2020 because of lower net income and higher operating cost. Thank you.
Hi, my name is Sanjay Verma, LGB 38003. I'm representing a group presentation for group number 007. And my first topic is the profit margin. It's a probability of the performance ratio that is used to calculate the percentage of the profit of the company produces from its operations. This ratio is used to compare the profitability of the company with its competitor operating within the same industry. It indicates the top performance within an industry and evaluate the need for further research to identify the reason of underperformance of a company. The operating performance of the profit margin of NAB is better in 2020 as compared to 2019. The company has reported the increased operating profit in 2020 and also higher value of assets in 2020. Further, the operating expenses such as expenses incurred for rent and lease are also lower in 2020. Therefore, the operating profit ratio of the company reflects the efficiency of the management to manage the operating company. The another topic I got is net margin ratio. It's a profitability ratio that shows the relationship between the net profit after taxes and sales. Here, net profit refers to gross profit minus operating expenses and income tax. The purpose of this ratio is to evaluate the profitability of primary operation. High net profit ratio shows efficient management of the affairs of business. The net profit margin in 2019 was better as compared to 2020 because in 2020 its company had lower revenue and higher operating expenses. Thank you.